Hello, viewers. You're welcome to another episode. My name is Sunday again. Uh, Today, uh, I'm going to be treating a topic that is very, very essential in our trading life. All right, these I've already discussed with my team, and they are putting this into practice. As a matter of fact, before you become a trader, a forex trader, you must have some basic rules that are guiding your operations, your day-to-day activities. All right. That being said, if you have not subscribed to my channel, please do. And head to our website www.egainsfx.com. Just sign up. It does not require anything. You sign up, you have access to all those materials that are there. Then, if you want us to mentor you, as in to train you, all right, you just send us a mail letting us know that okay, you are interested in trading. We are going to break everything down, not giving you those things that you don't need. The real thing that you need for you to be able to stand on your own and trade in the comfort of your home. Trading is a job, it's a skill set that you add to your regular job. Or if you now rise up to a level where what you get from there is able to pay your bills and you still have extra, I tell you, there's no need for you to be working for somebody else. So you be boss of your own. You just stay at home, you work, open your chart, do your analysis, wait for price to come to you, then you you shoot your shot. Only one trade a day, you're okay. If you take like two, three trades, good trades, even one good trade can cover your bills for like 2, 3 months. I'm telling you. But it depends on your capital, right? So that being said, today is 16th of April, and the topic is basic rules of forex trading. Basic rules of forex trading. As a trader, you've got to have a rule, even at home as a as parents. All right, we have rules at home, even in the office. All our offices, we have rules. Companies, they have rules. Even a country has its own rules. All right. So, in any field, there are rules that you must know. And in the application of those rules, you are just going to be doing the right thing. All right. It's just like a law of gravity. Anything that goes up must surely come down, no matter where you are, no matter your country. If you throw something up, it will come down. All right. So, it's like that. So, today we are going to be dealing with basic rules of forex trading. All right. Number one, as I've outlined here, proper top down analysis. I am giving you guys the real thing. All right. The real thing, practical things that you must do and know. All right. Proper top down analysis. Then, what do I mean by that proper top down analysis? Anytime you want to take your trade, before you take your trade, please, as a matter of fact, every weekend from Monday, the market opens on Sunday till the market runs 24 hours, it closes on Friday around 11 p.m. Then, after the week activities, there are data past datas, all right, the trends you see on your chart. What you now need to do on Saturday, on Saturday, you open your chart. Even though we do it for others, we analyze uh, the weekly chart for us to know where the trend, what we should be expecting next for the next week. Even though we do it, but you should be able to do it on your own. That is why we are empowering individuals. You should be able to do it on your whatever. If I don't have time to do it, if I have a tight schedule, or even your own mentor, if he or she has a tight schedule, they cannot, you know, do the analysis for you. So you should be able to do the analysis yourself and know where the trend is headed next week. All right. So the first thing is to do proper top-down analysis. How do you do proper top-down analysis? It's very simple. Now you go to higher time frame. All right. You go to higher time frame, which is the monthly. Once you click on the monthly chart will open. The monthly chart will open. Let's say, for example, all right, this is monthly chart. The month, the monthly chart, look at the monthly chart. The monthly chart is bullish, is heading up, is heading up. Even though you see there is a pullback, this pullback now that you see, all right, this rejection here, this pullback that you see is what is creating lots of up and down, bullish, bearish trend on the lower time frame. You have to understand that. All right? But the redirection of trend is bullish. No matter what happens in between, the direction is bullish. We are bullish. That is the direction. You have to be able to you have to recognize that, you have to know that the current trend is bullish. All right, if I show you something like this now, something like this from here, this is still monthly. From here you see we were bearish. This white candle you see going down, you see this is bearishness. If you open your chart and you see this kind of thing, you know that once a support level is taken, now if you don't know all those things, for you to say, okay, we are now bearish, if you don't know, please go and watch my video. Once the last break of structure, the support level is violated, you are now, the current trend has changed. All right? It's very simple to know. Don't complicate things. All right? If your strategy or the way you trade is still complicated, that means you are doing the wrong thing. You don't need to kill yourself. Simplify your strategy. That's all. Your strategy, that the way you trade, simplify. Just make it simple. Follow the rules, and that's all. You'll be fine. I tell you. Complicated issues do not make you profitable. As a matter of fact, what makes you profitable is simplicity and consistency. You do what you have, the rules you have set, you follow it over and over again. And once you have been able to establish a rule or rules, you follow it. Don't deviate from it. All right. So once you click on the monthly chart, you know where the trend is headed. Then you go to the weekly chart, open your weekly chart. Once you open your weekly chart, you will see, to confirm, to really buttress what you are looking for, your point, you now say, okay, yes, the monthly is be bullish, the weekly is bullish. So we are bullish. The current trend is bullish. All right. You now come to daily. Once you come to daily, you will see support and resistance level. Obvious support and resistance level. Maybe when you look at it, you will see where support, where resistance now turn to support. I'm showing you, look at it. This is the way I trade. Look at it. This was a resistance. Now is a support. This is a resistance. Price came here. He respected it. He had the pullback. He created a support, broke it. Now, at the end of the day, price still came back to retest this same resistance. You see, now upon retesting it here now is now a support. So you should mark this place. All right, we'll get to that. All right, we'll get to that. So once you have identified all those things, we go scale down to 4 hours, you see that okay, the trend is still bullish. All right, is still bullish. All right, you see that the trend is still bullish. Just to validate your point. That's all. You are fine. All you need to do next is just for you to now the place you have marked, the support and resistance that you have marked. You wait for price to come to that level. As soon as you see a hesitation there and you see that the pullback, the retracement has finished, once it's about to start the push or the bullish push, then you wait. The first bullish candle should close. Once it opens another one, and once the first bullish candle at that support level, once you see it closed, it should close bullish. That is to tell you that there are battle between bears and the bull, but at the end of the day, the bull won. That is the buyers. They won. They are the ones in control. For a candle to close bullish, meaning that the anatomy, the story behind it is that they are the ones, the bull, that is the buyers won the seller, so they are in control. The next candle you should see, it could be bearish. All right, it could be bearish. That is uh, opposite candle. All right, so it can retest that same place, just one candle, before you see a volume. The third candle, before you see a volume. So sometimes when the first candle closes, the second candle closes, just hold on, be patient. Don't rush into it. Be patient. All right? Wait for it. Once the price is ready, you see a volume from that place, it will move. Then you enter quietly. Once you enter, negative 27 is your target. Or if you see any resistance, the next resistance, if you are not good at using Fibonacci retracement tool, the next resistance should be your target point. As simple as that. So let's proceed. Let's proceed, guys. So the next thing, after you have done your top-down analysis properly, the next thing is the direction of overall trend. You have been able to ascertain it, which is perfect. That is the second thing. The reason for that top-down analysis is for you to know the overall direction of trend. Now you have ascertained that the trend is bullish. So the opportunity you should be waiting for, looking for, is to buy. All right, if you are very perfect, you can trade the retracement, because once price move a little, it will get to a point, found the resistance, then it will come down a little. So that process of retracing, if you want to trade that retracement, yes, you can trade it. All right, but the right And the proper opportunity you should be looking for is to buy. Buying opportunity. Wait for price to come down to your, just like this. All right, this is a resistance. All right, now this resistance, you see price pull back to retest this resistance. What does that tell you? Is buy. You have to buy. All right, you allow price to come. Once price broke this place, it came back retest. Then the next push should be buy. So that is how it is. As simple as that. Now, when you are doing your top-down analysis, after you have done your top-down analysis, you know the direction of overall trend. The next thing is to plot all major support resistance level from the higher time frame. All right, from the higher time frame. I repeat, from the higher time frame. That is a place where you should plot your support and resistance level. Not anyhow support and resistance. Major support and resistance level. Like there are resistance now turned to support. That is significant. You have to mark it. Anytime price come to that place, wait. Once you see a reaction, you enter full margin. Like my friend will say, that is A plus setup. Once you see that price come to retest it, he goes in with full margin. And that is how he has been making his money. So mark all the major support, resistance, some major support and resistance levels from 4 hours, daily, and weekly chart. You understand? Those places, that is where you should mark your support and resistance level. All right? I am not saying if you go to 15 minutes and mark all those support and resistance level, they are not good, but those lower time frame tends to break. But the higher time frame, the support and resistance level of higher time frame is always very difficult before it breaks. Once it breaks, just know that the next thing you see is retest and the price will be coming down. All right? One more. Then the number four on the item is you stick to the extreme when taking trades. What do I mean by sticking to the extreme while taking trade? Now, never you jump into a trade in between. Now that, okay, for example, now I say, okay, this is my support and this is my resistance. In between here, no matter what price is doing here, I don't want to enter trade. I rather wait for price, I rather wait for price, I rather wait for price to get here, see a reaction as it's coming down, enter from up to come down. If price want to come and retest this level, you know, I will enter. Or I enter from here, or enter from either enter from here to push to the upside. As simple as that. All right. So you should always stick to the extreme when taking your trade. Wait for price to get to that extreme, gives you a heads off where, well, it gives you a sign, then get in. Just be rest assured that you are going to make it. All right. Then the fifth one is patient. Always have the patience to wait for a setup. If price is coming down to a support level, wait. Have that patience. All right. Then stay disciplined. Stay disciplined. All right. You have your rules. Stick to it. If your stop loss is 20 pips you normally give, let it be 20 pips. If price has not gotten to a place where you have 20 pips as your stop loss, you should forget about the trade. Then emotional control, control your emotions always. Then cognitive bias awareness. Know that your decisions sometimes can affect your thinking. So always be very smart in your decisions. Thank you so much, and God bless you. Subscribe, share this video, your comment.